Hello, everyone. Thank you for joining us. My name is Ty, and I will be your moderator for today's 60-minute program. Ready for what's next? How technology can set you up for future success, presented by CFO Daily News and sponsored by Tipulti. Just a little housekeeping before we get started. If you have any questions during the presentation, please type them into the chat box in the control panel. If they're regarding the subject being presented, I'll add them to the queue for questions at the end. Now I'd like to introduce your speaker, Michelle Cousins.
Well, thank you very much. And I'd like to thank our sponsors for sponsoring today's session for all of us. And I wanted to just also mention that you do have the slides available as a handout, and I encourage you to download those. They're not only designed to be a reference for you, but certainly, you can share them with your colleagues. And I do intentionally make my slides very content rich because I do want them to actually be something that you can continue to refer to. So I hope that that's helpful. But we are going to be talking today about this aspect of technology and how much influence it's having over not only our general success, but specifically in relation to financials, how it can make us more efficient, improve our productivity, and really kind of even supplement a lot of the changes in the roles and responsibilities themselves as well. And so I'm sure you've seen during the pandemic alone, there's been a lot of advancement in terms of technology. And I think that as we continue to move through the pandemic and even beyond it, you're going to see that we are really just continuing to evolve with all the technological advances going on. So today we're going to talk about how technology and automation can really help you in better tracking the finances in your organization, and then also how to be more effective with those efforts, and then also how it really can prepare us and assist us in better forecasting what those financial needs are and the associated issues. And then how do we actually transform data itself into business intelligence, and what does that mean? And then just last but not least, of course, with that comes some tools and methods to help you to really leverage this data. And ultimately, that should help you in terms of your comparative advantage against other organizations as well. What are the roles and the functions of accounting and finance today? Well, accounting traditionally has always been about, recording and classifying, summarizing and interpreting, financial transactions themselves. And the managerial aspect of that is really around, things like the costs of production, as well as things like marketing, putting together the budgets, and then monitoring actual against budget. And then, of course, you've got the whole tax side of things as well. Finance is about getting and then managing the money that you need for your organization. And so, again, that also involves budgets, but also cash flow analysis, planning for expenditures, those kinds of things. And really this idea of thinking about the broader context of the organization's goals and how the finances can mirror and support those goals. So that means that you're making recommendations in addition to putting together financial information, also making sure that you're looking at efficiency in terms of how to reduce costs. And that also means that many times you're partnering with the actual production or operational ends of the business so that you can further help identify those opportunities as well. So financial management today has a lot of responsibilities, everything from, like I said, putting those budgets together, which really first derives from looking at forecasts for needs for the future, and those cash flow analysis and expenditures, and then of course the tax side, but then also this idea that we've got to have some controls in place with that as well, so that you can monitor how things are going. That means you're also going to conduct audits to ensure that you're in compliance, and it also ties in with standard operating procedures. Those could be procedures related strictly to the finance function, and they could also be operating procedures that you link to that are more production oriented in the organization. And so this also means that then you're coordinating with your AP and your AR activities as well, because obviously those are components that factor into all of the financials. So there's a lot of challenges that are out there today. You've got sort of the ongoing type things that that you would have had even, well before today's situation. The standard things that I list there, obviously, in your markets, whatever's going on with the products and services being offered and your competition, the credit markets and what the interest rates are like. Cyber threats have been an issue for quite a long time. However, they've really started to heat up even more, I would say, this past year, where we're seeing just new ways of infiltrating our information and that kind of thing. And then, of course, financial regulations, which, I recently did a talk about how a change in government can affect some of the financial regulations. And of course, we're seeing that just the tip of the iceberg on that as we see the transfer of power going on here in the United States. Volatility of the dollar, and then, of course, we don't just have competition in our own country, but oftentimes we're actually competing with others in other countries as well, whether it's for resources that feed into whatever it is your company makes, or in direct competition itself. And then, of course, we've just got the whole environmental aspect of regulation as well, which, again, based on the changes in government, we're probably going to see some changes in that as well. So a lot really to contend with there just generally. And then you throw on top of it this pandemic that we've been going through and all of the implications of that. And of course, some of that is still relatively uncertain. I think people are starting to make a lot of predictions in terms of how long it's going to last, what the ultimate impact's going to be, and so that's going to continue on for probably the foreseeable future. And then that also means that we're seeing a heightening of uncertainty in general. Not only do we have a lot of change, but we have more disruptive change that people didn't necessarily anticipate. And so as much as they try to plan for the future, we just have some of those things that that nobody knew were coming. That also means that like I said, with all of this proliferation of new technology, we're able to automate things more. And when we automate things, that of course frees up our resources to do other things. And we're seeing a real shifting in the roles and responsibilities of financial folks. So less on some of the taskmaster types of things and more into the actual strategy and analysis portions of what can help the organization. So today you got to have sufficient capitalization. Obviously, these are prudent practices that you should have at any point, as well as things like, really having control over your cash flow and how you're strategizing that as well. And that's similarly true with expenses, because I mentioned so much about the sort of cyber threats that are out there. That's one portion of security, but obviously there's a lot. We could do a whole discussion about all the security issues that are out there, but obviously keeping data secure in and of itself. And then we also have many times outsiders that we also have to do things for, or an audience that we have to be able to share information with. They're going to want to know things like, obviously, are you profitable? And that's true, by the way, whether you're a for-profit or a not-for-profit, right? So not-for-profit, we don't talk about it necessarily in terms of being profitable. We talk about it in terms of covering your expenses. But for profits, we want to see some profit. And then obviously, are we able to pay our bills? What's coming forward in the future? What's the debt look like? Are we able to really meet the short-term financial commitments as well as those long-term ones? Are we producing enough profit based on what we have in terms of assets, and what does that mean in terms of how we're financing our assets? And then, of course, if they're actual shareholders, what do they care about? Well, obviously they care about things like their return on their own investment, right? So technology can actually be very helpful in regard to all of this. So let me just kind of set us up a little bit on this. So you see there on the left-hand side some benefits of technology in general, whether it's related to finance or otherwise. Obviously, like I said, it can start to lower the amount of manual work where a human being is actually interacting with something. And of course, when humans work on things, we're not perfect, right? We're not necessarily consistent, even though we may try to be. So obviously, if we're doing things, then there's more likelihood of mistakes. It might take longer to do things. We might even have our own biases as human beings, and there just might be other inconsistencies as well. So technology can kind of smooth out the vast majority of that. And then that means, as I mentioned earlier, that if we're not spending so much time on these manual activities, that we do have time to kind of look at the bigger picture. And that means that finance can really be more of a player at the table, at the head of the organization to help drive the future as opposed to reacting to what those goals are. We have seen that, of course, today, I think we're all working in this sort of 24/7 environment. We're working from home in many cases. And so while we might be working odd hours, technology can further enhance that accessibility of information for us, not only if that's our work style, but just in terms of people that might be working in different time zones and really just need that information immediately accessible at their fingertips, and technology can help coordinate all of that. And so that also means that the information can be better stored. It can also be encrypted, which again can help address some of those security issues as well. So on the right-hand side, I've listed some of the things that it can actually do, and it's everything from, maybe automation in terms of completing things for us, whether it's forms and entries, providing information to other people so that we don't maybe have to stop and answer as many questions for people. It could affect workflows as well in terms of coordinating from department to department. It can even remind people of tasks that have to be done or maybe sign-offs that have to be made. And so that can track things throughout an entire process. And of course, it can really assist us with data analytics as well. And that's a feeder for what I had been discussing in terms of the more strategic aspects of our jobs. So this is a slide that you may want to flag because I give you kind of some teasers here to think about whenever you're considering digitalization for your organization. And what is digitalization? It's this idea of taking what could have been previously physical pieces of paper or data that's housed in a bunch of on-site locations, whether electronic or on paper, and really taking that so that it's accessible typically through a cloud environment and that kind of thing. And so you can think about what those in-process changes might be in terms of how that affects how work is done in the first place. And where are those opportunities where you can store data differently? How are people accessing it? So really what I would suggest in the in-process changes section is that we're really talking about doing sort of a review of how things are done currently so that we can identify what those opportunities are to further digitalize. And we can think about everything from nudge-based technology, which is again that aspect that you get reminded, so to speak, of what to do next. And you can even think about it in terms of the number of people that you might need. So you have people now that are performing functions, and what does that mean in terms of how long it's taking and how much things are costing, and how would that change if you invoked some of these technological solutions? And so when you're thinking about the actual purchase of any of these types of solutions, those questions that are on the bottom are the types of things that can help as you're vetting those options. So obviously we want things to be user friendly so that people are able to use them. And then also, how reliable is the vendor in terms of their own results, and how are you looking at their references? Do they have other organizations that you can interview to see what their experience has been? How flexible is the vendor in terms of any customization needs that you might need as well? And then how are they going to continue to address those as you move forward? And so that means that you're really conducting a cost benefit analysis, right? You're looking at what are the pros and cons to, one, bringing in more digitalization in general, and then secondly, depending on who you choose to work with. And that could mean that you're looking at typically, quantitative data when you think of finances, but keep in mind, there could be even some non-financial data that you're translating into a more quantitative type of measure as well. But there's a lot of ways that you can do evaluations, and it could be a simple T-chart with pros and cons, or it could be a more detailed financial analysis, obviously. And of course, that idea of break-even analysis, when does it really start to look like this may or may not be a good decision for you. Now, keep in mind that there are also some indirect costs with this as well, right? It's not just about the hard costs of whatever that new technology is going to do and what it's going to save us, but it's the transition that you've got to shift people into doing things differently that has an inherent cost in and of itself. Sometimes you may even have to do parallel activities until the new technology is completely implemented. There could be training costs associated with it. And then of course, like I said, sometimes it's not just, is it going to reduce staff as a result, but you may even have to have staff with some different skill sets as well. So a lot of transition kind of costs that are factored in there as well. Now, automation itself is a part of digitalization. So we can think about having access to data, having it be more useful to us, but then also automating tasks itself. And as I mentioned, that's where you're going to see a lot of the reduction in errors and less time spent and all that. So you can see here, I give you sort of a whole list of breaking it down into a little bit more detail in terms of what that efficiency enhancement is going to get you. So obviously, in addition to some of the things that I've mentioned, that means that it is really going to also enhance our virtual work. And many organizations are going to be working virtually well into the future. In fact, some are deciding they don't want to spend the money on office space. So this is going to be increasingly important as well in a virtual environment. Things like chatbots, by the way, are very helpful. We tend to think of them more in the, if you go out to a website, you're visiting a website, some chatbot pops up and wants to engage with you, which can sometimes be great, sometimes it's annoying, right? But in this context, it's more about for your internal use. And that can, again, be a great trigger to keep the employees on task as well. It also can do some things in terms of coordinating better across departments as well. So one of the things I think we continue to wrestle with, even though we've talked about breaking down silos for years and years and years now, is enhancing how we keep other departments informed of information, and understanding the financial implications of their actions can be hugely important. So that can also be a way that this can enhance that benefit as well. And of course, you know what? People generally don't say, hey, I can't wait to do some repetitive task today. So it also means that hopefully you're going to see some improvement even in employee satisfaction in terms of the types of work that they're doing as well. So I highlight here some things, and I'm going to come back to this slide later on, and so you'll see it twice because these kind of frame the discussions I'm going to have throughout the rest of the session in terms of how you can streamline your processes and your systems, right? So we'll look at how we can really create and maintain these financial statements more easily. What are some ways that we can think about governance in this context and standardize things, streamlining transactions, and then also these analytical capabilities. So before we can really dive into a lot of that detail, it starts first with planning. And it's so important that that financial folks are engaged in the organization's financials, but also in their broader plans. So here, This is sort of a diagram that I use with my clients just to kind of help them for context, right? So first, an organization is doing what we call enterprise-wide planning, and that could be a strategic plan, it could be business or operational plans along with that. But really in that process, what you're doing is you're looking at some sort of horizon for the future in terms of what that organization is going to need. And then from there, that is going to drive or feed into your financial plans. That means that once you have those financial plans, then you can think about what are the controls that you have to have in place so that you can monitor the progress on the plans and where there's variances and that kind of thing. So what is planning? You know, planning is an art. It's not a science. So I know many times if you're in finance, you're sort of drawn to formulaic type things, tangible results, those sorts of things. And so it can be, you know, sometimes a little unnerving to get into planning with the rest of the organization because it can be iterative, it can be messy, it can be argumentative, right? But it is really this idea of, again, thinking about not just what the organization wants to do in the future, but what the implications are of those ideas and plans that they want to have. And so we want to ultimately help our organizations either improve or heighten the things that they're good at or expand in some way, right? So first we forecast what we think the conditions are going to be like, what we're going to be dealing with internally and externally, and then we start to say, okay, where could we end up in all that? And so there's different types of planning, as I mentioned. There's strategic, usually goes out 3 to 5 years. Business planning could be done for the whole organization, or depending on the extent of what the organization does, how complex it is, how large it is, could be done by line of business, or similarly, I have other categories there, things like location. Operational plans are typically much more tactical, and they're really drilling things down into quarters, months, and even days, where maybe it's you know, all of the different handoffs that occur. And then contingent planning is this idea, okay, let's put together some backups. What if we don't get some resources that we need? And of course, this has not just that sense of whether there's an emergency or a crisis, but increasingly organizations are seeing that they have to sort of have different pathways to get to meet their goals in general. And so of course, financials play a huge part in that as well. And then business resumption plans are more when something actually happens. You know, how are we going to resume business as a result of it? And of course, many of us are dealing with that very closely during the time of the pandemic. So you're determining your organization's needs, and that means you're starting with those long-term goals, drilling them down to operational objectives, looking at what those key initiatives or projects are going to be to help you get there, and then of course factoring in what are all the steps that have to be taken. Some people call those work plans, and then what are the associated budgets. And so you can see, obviously, I think finance is hugely important in this process. Everything from thinking about the vision for the future, solidifying the purpose of the organization, is that changing, what those long-term goals are, what are the objectives, and that's using that acronym SMART, which, by the way, if you haven't heard of it, specific, measurable, achievable, realistic, time-bound. So what are those real definitive time frames for getting things done, and what are the metrics associated? And then what are the activities? And then once we break down those activities, that's where we can really match it up against those financial uses and needs. And of course, that's with the backdrop of relationships as well. So the way that I kind of look at this drill down effect is you've got your organizational plans, you're hopefully involved in that process within the financial function that drives your pro forma statements for the future, that drills down into those actual operational budgets, and of course those feed into your capital and cash budgets. Lastly, of course, is that aspect that then you'll have a way of thinking about what do we have to control and monitor. So financial controls really involve this comparative effort where we're comparing what we put together in our forecasts and budgets against what's actually occurring. And so we can think about those short-term financial commitments as well as just, again, matching things up, right, against what we have, what we need, and where we end up as a result. And so that means that we also have to think about those operational funds in terms of the day-to-day needs of the business, how we're controlling our credit, what inventory is needed and what the timing of that inventory is, and then of course where we need to make capital expenditures as well. A big part of what we see in the advantage with technology is this idea that it not only assists us in getting the information that we need more quickly, but it allows us to better analyze it as well. So we might have, great minds to be able to do that as individuals, but this technology will sometimes allow us to look at things in new ways, in terms of trends, in terms of how we package the data as well. So analytics in general is about using tools in those ways that I've described. And keep in mind that, in addition to general financial information, I mean, we've got all kinds of types of information in terms of the processes. So it could even be the efficiency of our internal processes and looking at that in conjunction with the financials, physical world observations. There's even a lot of biological data out there and public data. And then in terms of even just preferences and intentions of our customers. And so that can be an indicator for what might be happening down the road if we see changes in demand, for instance, or which types of products and services they're tending to gravitate towards these days. So data mining is this field, and of course there's people who are getting whole degrees in data mining that can really help us to look for these hidden patterns. And as I mentioned, technology can do a lot of this sort of looking for us, which is really, I think, the most exciting part of where technology has been headed. So that obviously has huge benefits, right? So I list them on the bottom there. Can help us obviously in the quality, but also the completeness, the timeliness, and even just the relevance of things. So we want to use this financial data to not only talk about where we are currently and continue to update that, but to actually do that anticipation of the future as well. So that means that we're looking at the specifics around what is driving different issues. We're doing some modeling, and technology can be very helpful in the modeling efforts as well. Some of the advanced analytics are, again, going to help us to actually draw conclusions, and even, conclusions that we just can't see. The human mind actually has some limitations. So the flip side of all this is that, yes, you might be able to make some of these conclusions yourself, but the technology is not only going to make the same types of conclusions, but some additional ones that just we would not be capable of seeing, or at least as quickly seeing. It's also going to provide some opportunities for us to be able to react more quickly when we do see an issue as well. And I think that's an important part because things rarely go completely according to plan, right? And so that's going to give you an opportunity to look at those trends. It's going to generate some reports for you, that kind of thing. Also information you can share with others in the organization as well. So there's a lot of examples, but I list a few there just in terms of some of the powers of this stuff. So you can see integrating and streamlining overlapping customers and vendors. So things coming in from multiple sources, essentially, better ways that we can coordinate with our go-to-market strategies and looking at maybe where we can improve our margins. So whether it's a particular type of customer or where we're seeing our product in different geographic locations, all of those sorts of things. And then even just breaking down the financials in general, right, which is sort of a precursor to some of those points of analysis. So making sure that we can see things in those different subsets, so to speak. So this can really, again, help us to think about how we can enhance our actual strategy for the organization. The software can help us in terms of capturing this data, also manipulating it, and then of course interpreting it. So this is going to increase our organizational intelligence overall, right? And keep in mind that one of the key roles of finance today is to really help the others in the organization to understand the implications. So it also means that it's not just that data is there in a way that you can understand it as a finance professional, but it's also translated in ways so that it's more readily understandable for people in the rest of the organization. And that's, again, going to really help you, hopefully, in terms of getting a jump on the rest of your market or your industry. And that's going to help you to grow, not only in absolute terms, but hopefully also in market share as well. Now, obviously, there's some very practical aspects in relation to finance. It's going to speed up your financial close, going to make your reporting process much easier as well. And of course, that's a very time sensitive process to start with. And so anything that can be done to further unburden you, so to speak, of that can certainly be helpful as well. So I mentioned reports. Reports are not in shortage these days. Sometimes I see organizations that they're report happy. They have so many reports, and you question whether they need all the reports that they have, whether they have the right reports, whether they are actually thinking about the information in the right way. And then, of course, even things like how the reports are formatted and communicated, right? So it first starts with figuring out what are the indicators that you want to track in the first place. And instead of just tracking things for the sake of it, thinking about which things are going to be most relevant and useful. So obviously on the financial front, there are some standard sort of financial metrics that you would track that are just sort of part and parcel to the function, so to speak. And I've listed some of them there. EBIT, EVA, Berry ratio, which of course compares the company's gross profit to its operating expenses. And you can think about, the ratio coefficients and all of that. Contribution margin, liquidity ratio, interest cover, your days in accounts receivable, your net cash flow, gross profit margin, transactions error rate. So that's really like a starting place, right? Because these are the standard things that you really have to measure. But you want to also think about things unique to your industry or things unique to your organization, things that tie back to those goals that would be in the plans, and what are the key things to keep track of. And that means you may even want to create a dashboard. So in addition to some of the standard reports that you're already releasing to internal and external stakeholders, what are some key dashboard things that maybe you want to share broadly across the organization, or maybe there are even metrics that are functional related that you're going to share with particular departments as well. So that's really something that I think, it deserves careful attention to make sure that people are also matching up their daily work and their activities to where they see the progress and the results. So that really means that we're communicating with other departments, with people inside and outside of the organization. We're translating that financial information into, as I said, it could be a dashboard. There's all sorts of ways that you can do this these days, having a context along with it. So not just showing data, but also providing information around what the data means, what the implications are maybe to particular recipients of the information as well. So finance is increasingly not just about numbers, but also about explanations, being able to think about the audience that you're sharing information with and the best way to actually get the message across to them, right? Because some of your constituents are going to be very financially sophisticated and others, of course, are not. And so I do put some material preparation tips there on the side. And of course, that's true whether you're using an outside vendor for your financials or if you're doing it internally. And so things like, obviously, not reinventing the wheel. You don't want to keep constantly having to recreate things from scratch. So where can you re-leverage things? Obviously, the more that we're providing things in short bites or visuals of some kind, maybe you're catering some of the narrative that goes with it, depending on who is getting that information. And then, of course, we've got to remember that because so much is virtual, and then on top of it, people, in terms of being very remote and dispersed, that we don't necessarily always have the same control over information that we did in the past. We've also got to think about being careful about who we're sharing information with and where it's going after that, how it's being stored, how it's being kept. The cloud is, of course, behind a lot of this. These days, I think most people have heard of the cloud, right? And what is cloud-based computing really? You know, this idea of software as a service, that type of model. And it's not only transforming areas like HR, but it's also transforming areas like the legal department, the finance department. It's operationally bringing organizations together. So this is also a reminder that financials have a people side to it as well. So thinking, again, I talked about many times your financials, your projections for the future, your look at efficiency is a lot about whether you're going to continue to need people as well. So keep in mind, this should all tie in. So you may have systems that other departments are using, and how are your financial systems dovetailing with that? And the cloud is a great way to integrate those things. So it's going to obviously enhance all of that. And you can see a list of different collaboration tools as well. So keep in mind that in addition to just data storage in general, we have a lot of different tools that can better help us to coordinate across the organization. And so again, that's just a sample list. There's so many out there. And of course, as you get towards the bottom of that list, you can even think about things like artificial reality and virtual reality, and some really exciting things that are starting to be less sort of sci-fi television movie type things and more actual workplace tools as well. So let's talk about artificial intelligence, because I do think that we are really, honestly, I think we're just seeing the beginnings of this, and it's pretty exciting where it's headed. So artificial intelligence is around this idea of computers doing things instead of people, and it's not just some of those aggregation of data type activities, but it's really the sophistication where technology is learning from the activities it performs. And so you've got machine learning where systems are continuously improving as they go, adjusting their performance, maybe even based on the types of data that's pulled by the user, that kind of thing. And then deep learning is where these algorithms are actually in these nested networks where they're taking the output from one level and using it as input for another. And so again, taking that to the next level. Cognitive computing. That's where it's going to have an architecture across multiple systems in your organization and subsystems that actually simulate making decisions. So rather than sitting in a room, you know, and just say, okay, with a whiteboard, well, what if this happens? Can we throw up some numbers? This is going to improve not only the accuracy of those options that we're looking at and what the implications are, but it's also going to come up with more of them, and it's going to do it in a very efficient way. So that's pretty exciting, I think, as well. And then robotic process automation, you can tend to think of some of that as more on the you know, the production side of things, but it's really actually about computer software that captures and interprets business process actions and then can replicate them. So while we think of it in terms of, you know, robotics, we think of the physicality of that, it could also affect all functions, not just those physical ones as well. So these are some of the exciting things that we're starting to see available through a lot of the technology that's out there. And you don't necessarily have to be intimidated by some of the terminology. It is an opportunity, I would say, to partner maybe with your IT department, you know, or get a consultant on the IT side to also look at what some of these things can do for you, because they'll be able to have sort of that tech angle that that maybe finance doesn't necessarily have. And of course, if you're hiring finance people, this is a great time to make sure you're also interviewing for some of these technology-based skills as well. So as I mentioned, this is the slide I showed earlier. So we can think about all these things that I've been talking about, again, in that wraparound way of addressing all of these things here. So the organization and financial planning drives the financial controls, and then by leveraging the resulting business intelligence, you can really anticipate and address the issues and opportunities that result, and then better monitor and communicate your financial data. So that's really driving all of these things that, again, I've mentioned on the slide. So here are some examples functionally as we break down some of these accounting and financial functions. So you can see around accounting, journal entry, account reconciliation, and it can automate a lot of that process, which is a standard headache for everybody in their organizations, right? The accounts payable function, so everything from making it easier for invoice entering and matching, as well as even the approval process for expenses and auditing of all of those transactions. On the accounts receivable side, it can assist with generating invoices, validating those invoices before payment as well, and then even the cash balance application and analysis. On the financial analysis side, you can use technology to help with actually consolidating and even reporting these metrics that I've been mentioning. And then of course, payroll. Right, so we've got to make sure people get paid and that we know how much we're paying them and so on. And this is going to help in terms of making sure that it's clear what hours were worked. It can make that reporting process easier. It can also facilitate the deductions that you're taking out of pay. And then even just some of the issues that come up are the eccentricities. And you can even think about it in the context of what we're dealing with in the pandemic, that we've had maybe some unique implications on payroll as well, in terms of whether or not people are getting paid while they're off work and so on. So this can really help address even some of those issues. Artificial intelligence does really help in financial modeling, and I wanted to just stress the financial modeling a little bit more here because this is, I think, going to be instrumental really in where we see organizations able to survive the pandemic alone, much less thrive, right? So thinking about what those inputs are, you can obviously do a comparison against your historical performance. It could also be comparative against the rest of the industry and some of the metrics and benchmarks associated with that. And then you would add to it, what are those assumptions for the future? And again, modeling is not about one set of assumptions, right? It's this idea of maybe looking at different scenarios, a best case, a worst case, maybe variations within, things that could be happening externally that maybe you don't have control over. And by the way, this isn't necessarily negative stuff that we're modeling. It could be that there are some negatives that we're concerned about on the horizon, but certainly could also be positives. We've even seen during the pandemic that some organizations have actually done extremely well because they strategized immediately. What is this pandemic going to do? What are some ways that we can, dare I say, use that overused word pivot to meet those? And then looking at the associated outputs as a result of that. And that's everything from pro forma income statements, balance sheets, cash flows, supporting schedules that go with that. But there's also more advanced types of projections. And again, the more that we can drill that down so that we can see the implications for given functions within the organization, that level of detail can really be facilitated through technology, which is just more accurate and so much less work. Now, I've talked about vendors that can generally perform a lot of these roles that I'm discussing. And by the way, we are seeing some organizations that are not only just outsourcing their technology needs for all of this, but frankly, and I know some of you won't want to hear this, they're also outsourcing some of their finance function as well. So you may find that that starts to change even in terms of your own roles. But outsourcing in general is this process where an organization contracts with other companies to perform some or maybe all of their function. And so I list some key questions there. This is another one of those slides you may want to flag as you're vetting, whether to take something outside or to use an outside vendor's software or technology, thinking about that check and balance of whether or not it really makes sense for you. And some of the individual vendor considerations I list there on the bottom, obviously the cloud's really important in that. But what does that really mean in terms of what that vendor is going to provide for you? How well is their solution going to fit in with whatever systems you have to keep in place internally? Is it going to connect well? Is it going to integrate across those? Are we really going to see those great results of accuracy and timeliness and communication? What evidence do they have of it? Can they show you what they've done for other organizations? How long have they been around? Where are they situated in terms of vendors that are choices out there for you? And obviously not just whether they have experience with other companies, but companies like yours, whether it's companies of your size or your type of industry. These are some of the questions that you can consider asking cloud tech vendors. And again, this would be one I would flag as well. So I'm not going to read every question on the slide, but the idea there is that you want to really understand what it is that they're able to provide and to what degree. You know, how far does it go, for instance, in terms of some of the modeling capabilities? And then, of course, hoping that your organization is always going to grow as well. That, you know, is it going to be able to scale up with whatever your future plans are? If you're going to diversify as an organization, or you're going to have additional locations that you're going to be opening up, how does this all fit with that? So it's not just sort of a one-stop, you know, decision. It's really thinking about the future and not just one transaction. That means you also got to think about how the vendor is keeping your data secure, as well as how just the sort of interplay with the vendor is going to go. So cloud-based companies usually are pretty on their game. If they're a good company, that's something that they're going to initiate conversation with you about in terms of how they actually foster a good sense of security with their data, and not only just their data, but even their work protocols. So think about it, it's almost like an interview, right? You interview candidates for jobs at your company, but here you're really thinking about how you're interviewing an outside vendor. Looking at their security policies, who's going to have access to your data, how many people are going to have access. There's something out there called zero knowledge encryption. What is that about? Well, that's about where a service provider doesn't know anything about the data that's stored on their servers. So is it, you know, that they're going to really have access to everything that they see about your company, or is it that the technology is going to have that access, right? So there's a difference between the technology being able to reason through your information versus some employee that's just sort of rummaging through your information. So be aware of things like, you know, whether there's a data breach, you know, what's going to happen? How does that work? Tell us how you've handled that in the past, or what's your plan for how to handle that. You know, think about when you're doing your contracts, who's going to have liability, who's going to have to, you know, do any notification if there are customers involved, and that kind of thing. So there's a lot of pros and cons to increasing your digitalization. So again, this is a lot of the advantages here on the left-hand side. And really, this just, you know, it can have huge ripple effects across your organization, not only currently, but into the future. And so you can see that, you know, it can certainly enhance your efficiency and your productivity, but also you're better able to even evaluate individual staff members, not only within finance, but in other departments. And people are going to be more engaged. They're going to understand more about the context of the implications of the work that they do. And it may even help them to be more flexible. Now, obviously, everything's not perfect, so there are some disadvantages as well. I list some of those on the other side of the slide there. First of all, when you first start to integrate any kind of new technology, there is a disruption associated with that, right? I mean, as smooth as you try to make that transition. So you got to recognize that up front and think about the timing of that as well. It certainly costs money. I mean, vendors aren't going to give you all this stuff for free, right? So again, as you're doing that cost benefit analysis I discussed earlier, thinking about what the real money is, not only when you first engage a vendor, but what does that look like down the line? And then, of course, sometimes technology gets outdated very quickly. And so you've got to think about where you see that headed yourselves before you decide to make that purchase. And so again, you know, calculating some ROI around that, right? Thinking about different tools and different systems. And do you need everything? Do you want to go with one vendor that's one-stop shop for you? Are you going to be working with different vendors? Of course, as soon as you start to work with more than one vendor, you really increase not only the complexity, but the potential, frankly, for probably having some issues. So you got to think about that interplay as well. And then, of course, if it does involve something where you're collecting additional data, that even could be around efficiency related to employees' performance, people don't necessarily like when more metrics are being imposed because they might feel like sort of Big Brother is looking over their shoulder. It is a balancing act. So you got to think about, how much you're going to change things and how fast you're going to change things. So looking at, I would say, what are the major items or the most important items to automate first, where you're going to see the greatest benefit, right? So again, not just doing an overall cost benefit analysis, but drilling it down to what the different technologies could do for you. You see a stat there on the page. Currently demonstrated technologies can fully automate 42% of finance activities and mostly automate a further 19%, right? So that combined total is 61%. It's pretty significant. Think about phasing things in. So again, the more repetitive tasks might be where you want to concentrate your efforts first, again, in line with that cost benefit that you're going to do. But you're going to have to run parallel activities during the transition just for backup purposes. We can't take those risks otherwise. Having those checks and balances in place. And then also thinking about what you're going to automate in the context of other process changes in the organization, where maybe you're also working either yourself or in conjunction maybe with a consultant that's looking at how to re-engineer things or how to do things differently. And then, of course, even in your own domain, your finance function, some of the folks that work in your function are going to see that their job descriptions are going to change, and sometimes very significantly. So you got to think about that in terms of your existing employees, but then also thinking about your hiring needs and how those are going to change based on what technology you're using. During this transition type phase, when you're bringing in new technology, you got to think about how you're going to provide training and transition for that. So I list some things here in terms of some of the checklist items. And so again, this might be another one that you want to flag as well to kind of refer back to. But obviously, people have to understand, why are we making these changes? Why are we bringing in this technology? And not just what's in it for the organization, but that adage, what's in it for them, right? For the individuals. Making sure that you do have signals there in case there are any issues that are arising as part of that implementation. Making sure people understand what training they're going to have to get, how they're going to get it, and that the training itself is accessible and user-friendly. And then making sure upper management is on board with all of this. If your upper management is not only signed on to this, but a fan of whatever this transition is going to look like, then you're going to have a slim chance of succeeding. You got to have that support and sponsorship. Engaging staff, the more that you engage them in the selection process of vendors that you're going to go with or what you're automating, if they're part of that process, they're much more likely to buy into whatever the changes are that you're making. You do want to make sure that you're thinking about very holistically who's going to be affected by whatever you're putting in, and I would cast a pretty broad net on that. Train the trainer mentality can be great as well. If you're a large organization and you can't train everybody all at once on whatever you're bringing in, then you could use that sort of trickle down, train the trainer way of doing it. But you got to just in general make sure that it's very clear on, what are these phases of rollout, what's the deadlines associated, how are we delivering the training, and frankly, give people incentives for wanting to use this new technology, whatever it might be, because sometimes people are a little reluctant. You want to stay on top of the security issues. And so I list some of them there. I mentioned a little bit at the very beginning about cyber threats. There's just so many things going on these days. And it seems like every week in the media, there's some new way that somebody has found to crack into companies' data. So there's viruses, and those, I think we've used that word a long time, but we're seeing new types of viruses out there, phishing, even just things in terms of if companies aren't very careful about their physical computer items, and how are those being disposed of, how are passwords being kept. That's a hot topic right now. Ransomware, I've actually seen situations where companies have been held hostage, where someone gets access to their data. They not only have access to it, but they steal it and hold it, and the company has to pay to get it back. And sometimes they do actually pay, because that frankly is a better alternative to having to wait for someone to try to investigate it. Again, hackers, they can get into things, but also it could just really disrupt things, not only for you, but for your customers as well. So thinking about what process your vendor has in place to avoid these things, to have workarounds, to have backups, and that kind of thing. Now, technology can also, by the way, be very helpful on the fraud front. So according to the ACFE, which is the Association of Certified Fraud Examiners, multiple forms of fraud really can actually equate to 5% of your revenue, which 5% is a small percentage, but translated, it's a lot of money. There's different types of fraud. This could be things that your own employees are doing around the purchasing process, payments that are being made, how things are being billed. There could be things that are affecting payroll behind the scenes, purchasing cards, all those sorts of things. And so these systems and software can help to actually not only reduce fraud in general, but can actually dissuade someone from considering committing fraud in the first place. And so that's something to think about as well, because it's sort of the hidden enemy there. And sometimes you may not even realize right now the fraud that's going on to even be able to measure the difference. But chances are that in many organizations, there is some degree of fraud going on, especially if you have very large numbers of people or very complex operations. Governance is part of this as well. So a lot of times it's getting harder for organizations to keep their head wrapped around all of the different changes in terms of the requirements and that kind of thing. And so of course, these can be vehicles that can help you to stay on top of what's going on. And obviously finance is not an area of the company where you can just be creative and not follow the rules, right? So that means that, we've got to stay current. We've got a lot going on in terms of what we've got to keep tabs on, everything from the pandemic related regulation and that kind of thing, to just changes in workplace violence itself, which, we have to actually budget money now to think about how we're going to address those kind of situations. We've got privacy concerns with everything from employee data, customer data, et cetera. And then we've also got these pre-pandemic typical things that we already had to do in terms of compliance. So these vendors are going to help you not only to stay current, they are going to troubleshoot a lot of that stuff. They're going to inform you. They're going to update their systems for this information. And so that can actually take a huge weight off your shoulders. And then of course, there could even be some ethical considerations as well. So to kind of summarize all this, you really want to think about how you're optimizing your tech platform. That means that you're thinking about the benefits of these options, that you're reviewing periodically, how can you take things to the next level, so to speak, what those metrics and systems of measurement are that you're going to use, and how are those going to continue to change, and then how are you communicating that, whether it's through reports or dashboards. I always like to share this in this kind of discussion, because it's a good reminder that we're not necessarily ever done, right? I mean, we're continuing to improve, and that's true of any process, but certainly in the financial realm. And so I list some of the steps generally there to think about as you iterate over time, whether it's maybe through an annual review or through your audits or through your planning process. All of this really can help your organization not only to be successful in terms of the money side of things now, but certainly can better situate you for the future as well. So today's takeaways: take a holistic approach when you're thinking about how you're going to modernize these various aspects of accounting and finance, and really think about what that means in terms of what technology you're going to need. Now, people many times have questions after the fact. I am sharing my contact info that's also available on the download of the slides, and I encourage you to reach out to me. You can reach out to me whatever way is comfortable for you. If you have questions, something maybe unique to your organization, or you're looking for additional resources, that kind of thing. So with that, I'm going to turn it back over to Ty to close us out.
Thanks, Michelle. On behalf of CFO Daily News, I would like to thank everyone for attending the webinar. This concludes our program.